So in today's lesson, we'll be going through power of confluences, and I believe that for you to trade, you need to have more than one reason or more than one confirmation for you to enter the trade. And with that, we'll have to look at different confluences that you need before spotting your setups to trade. And the main thing or the main advantage about confluences is that they increases the advantage of you winning in the markets rather than losing. It only increases the probability because you can never be sure about anything in the market. Now, as you can see in the on your, as you can look on your screens, you can see that we have this beautiful setup here, but now you need to use a multiple conferences for you to get this entry and all that, and you cannot rely on one conference to give you those entries and all that. Now, for you to have a better understanding of what I'm talking about, and by the way, this is the part one of conferences in forex trading. I believe I cannot exhaust everything in this video, so I will have to do other videos in the future maybe for you to understand well. Now, starting afresh from this, I can remove all the drawings and we can start analyzing together. Now, in this video, we'll majorly be focusing on psychological levels and trend line and mostly candlestick pattern and the moving average. I use EMA, so that's what we'll be majorly focusing about. Now, going to the practical side, we can start from the daily time frame and now start doing or start implying all what we have said, starting from the psychological levels, coming down there up to our entries and all that. What you have to understand is, first thing is you need your psych levels. And if you don't understand what psych levels are, these are levels that are rounded to the nearest zero or to the nearest round number. Now, with that, you have to do your own assignment and understand much about this, but I think I've already made a video explaining this, so you can go and check out. Now, starting from daily time frame, plotting our psych levels, we can start from 19500, 1.9500, and from there we go from to 1.90, 1.90, which is here far away. Now, between these two main levels, we can see that we have a gap of at least 200, at least 400, 500 pips between these two major levels. We have 1.95 level and we have 1.90 flat. So looking at this phase, we'll have to plot our quarterly level, which is kind of major level, but it divides the two levels into two equal parts. Now, you can use this and we use this, and we can have the we can have the middle point now, which is 1.92500. Now, having plotted that, we'll have to dress it up and try to look at how it will look. You can see that we have that level. We'll have to clone that. And now we will have to clone that. So basically the market have been ranging between 1.92500 and the 1.95 thousand. Those are the levels that the market have been ranging for the past few days. Now we have this, which I will plot here, so we can delete that. Now we have that. Should the market reject this area, so this yellow zone that is here, it is treating the market as support. Should the market reject here, or should this level hold here, we'll be going back to 1.95 thousand. Should the market now, and the scenario for selling is vice versa. Now, should the market break, we should break the downside, give a retest, and then continue with our downward movement, which is the most probable thing to happen. Now, away from that, the only thing you cannot do is you cannot make a rational decision based off of these psychological levels. You need other confirmations before making your decision on whether to buy or to sell. Now, going to 4-hour time frame. Now, going to 4-hour time frame, we will need other things. We'll need other things to look at, because here is where now the likes of market structure comes in, and the likes of trend line comes in, the likes of candlestick pattern comes in, and all that. Because you need to understand that for you to read the market, you need to have the ability to read the candlestick pattern on the nature, all the nature of the candlestick, how the candlestick are, and their formation and all that. Now, starting from here, we can see that if you are relying only on psychological levels, we have only limited decisions to make, because the only time you can rely on this is only on one occasion at this time. You only have to wait, come here, either reject or come here and break the downside, then retest, and then continuation. And for you to do that, you will still need a candlestick formation to take that trade. Now that's where now we have to include other conferences, other conferences, and other confirmation in the market for you to make those decisions. Now, in here we can see that we have a market structure. We've been creating successive lower highs and lower lows. If we can look at this, when the market came here, it rejected this point, creating this high. So we have this high. So it then came, then we have this lower high here, and then finally we created this lower high here. If you can look closely, this high is lower than this, and this high is lower than this, but it has been giving us almost equal rows, and that is to mean it is building momentum to break to the downside. Now look, if we can introduce now a trend line, we can draw a trend line here and try to implement it here. You can see we had this the initial touch, we had the second touch, and this was supposed to be the third touch. But remember, if the market is in a downtrend, already the momentum is facing to the downside, so the market won't have a lot of momentum giving you bullish moves. So that's why you can see there is a miss of a point, maybe like 5 pips here, because the momentum is already to the downside. Now, if we can try to look closely here, we had this evening star here. Trying to understand now the candlestick formation or candlestick pattern, you can spot that here we had a beautiful evening star here. I don't know whether you can see it. We had a beautiful evening star that was here on a higher time frame. Not well represented, but it makes sense. So we had this bullish candlestick, this undecided candlestick, and this bearish move. Now, I'm using dark candlestick for psychology purposes. I think I've mentioned this on one of my videos, so you can go and reason with that. Now, we have already included I've already included psychological levels. I've already included candlestick pattern, and now market structure, and finally we have used our trend line. Now, what is remaining is to know where the market, or where to execute the market, the exact point where you will have to take to fire the bullet. I mean, now that will have to come to lower time frames, like 2 hours, your 2 hours, your 1 hour, and all that. And I think I'll be making a video on top-down analysis for you to understand well on how to use or utilize these time frames based off of their functions in the market, because mostly daily time frame, you cannot use daily time frame to execute in the market, and you cannot use 4 hours to execute in the market, but you kind of need those larger time frames for you to understand the direction of the market and to move forward. Now, if you can come to 2-hour time frame, coming to 2-hour time frame, this was a simple trade. I think I did this yesterday, if not the day before yesterday, where I was talking about market breakdown and predicting what the market will do during this week. Now, if you want that video, you can go there and look about it. Now, coming here, you can see that we had a good rejection here. Now, as I have told you, the momentum is already facing to the downside. You can see this good rejection here, and this is an inverted hammer or whatever you want to call it. And still, there is an evening star here, and this now is more beautiful than how it was printed in 4-hour time frame. Now, this is an ideal evening star. We can see here we had this bullish move, we had this undecided candlestick, and we had this momentum bearish candlestick showing that the momentum is facing to the downside. Now, that is one confirmation that you have that the market is going to the downside. Now, number two, we can draw here at a counter trend line. We have this counter trend line here. Now, trying to look at this, implying this counter trend line, it will teach you that we have already confirmed that the market is facing to the downside. So we are looking for entries in the market. And now guess what? I think wherever you will see, so here there is something that I have to say, that after the formation of this candlestick, this evening star, you could have entered the market there with that evening star, and then your stop loss have to be up here, and your next take profit have to be down here. 1:2, not bad. But if you want to get more clearer entries, you need to wait for more confirmation again. As I have said, now after that, we can see that the market traded. It never came in passive to approaching this trend line. It came while correcting, but look at where the candlestick are moving. They are giving us small candlestick facing to the downside. That should show you that it is creating momentum to go to the downside. Now, if you can see, even we had all this rejection here. Look at this, all this rejection here. Like rejection to the downside, creating small candlestick facing to the downside. That should show you that we are going to the downs. We are creating a bearish move, a strong bearish move rather than that. So the last thing that you should confirm before entering the market should be this. Now look at this. The market finally broke this trend line. And after breaking this trend line, the market still came back to retest this trend line. Look at this cross re. Broke here, came back, retested the next time, created tweezer stop at the break of at the retest of that trend line. And now from there, you should confirm to you that the market is about to go down. And not only that, if you can go to 1 hour, I already see an entry in 2 hours, but if you want to be more conservative, you can go to 1 hour. And from the 2-hour time frame, you can see that the market is trading below the moving averages. The market is trading below the EMA. That's something that you should consider. Now, after seeing this, you could have taken your entry at this retest, and then your stop loss should just be above 26 pips, and then you'll be moving to the downside. And this move, I call this move, it's not that I'm telling you because it has already happened. I called this move right. So if you want to get it, you can go and find it in my previous videos now. And with that, I believe you kind of get now like that rough idea of how to combine confluences to give you like a correct entry of what you need. Now, many people will say that this was a ranging market, and I believe them, but you need to come up with strategies to trade a ranging market, because if you wait this market to up to the day it will break this, you will have to be taking a lot of rest without trading the market. Now, having said that, that was just to introduce the concept of confluences, but deeper videos will be made. Maybe I will make part 2 and part 3 explaining deeper how you can do this and giving you more examples of how you need to understand. Now, I think I will do another one example and then we just end the video. Going to, maybe you can go to Euro USD, or we can go to Euro JPY. Going to Euro JPY. I know I've already analyzed this, so I won't mess up with my setup. I will just go to another. I open it with another broker. Let it load. It's taking time, but maybe from there we can just use it because it's taking time to load and I don't know what is happening. Oh, it's good now. It's good. uh, so we can use euro jpy and try to understand it. I was using this for backtesting and all that. Now opening a new chart, it indicates to you that you have a lot to do for you to understand. You cannot just rely on one conference. That's the main idea behind this video, that you cannot rely on one conference to complete one video. Now, if you can start by plotting our cycle levels, you can start by anything that you are seeing. I can already see here we are in an uptrend, a good uptrend here. I can plot that, but I don't like, I like keeping my chart screen, so I will start by cycle levels and then I will go like mounting all the other confirmation and conferences. Now, from there, we can see that we are coming from 162,500. We are coming from 162,500. Now going to 16500. I don't have to plot more zones because I go like a racing zone up while the market is moving. So the further the zone, I'm not using that. Now, trying to consider this. This is a 250. This is a 250 move we are building here. 250 pips move we are building here. If it confirms it, 250 pips move. And today I don't want to complicate things up because we still need to use even the Fibonacci. You need to utilize every tool that you have in your trading arsenal. Everything. You need to make use of it. Now, going to the 4-hour time frame. Going to the 4-hour time frame, we can see that 4-hour time frame. And by the way, even this trade, I called it yesterday when it was still here, and I said it will have to move down a little bit for it to build that momentum of going up to build that bullish move. If you want to confirm, you can go watch that video. Now, after doing that, we already have our zones and all that. Now we have our minor zone here. I can already see it. We have a minor zone here, but this is just for just for purposes, for management purposes. From there, we can see that we had this trend line. We have been having this trend line, long-term trend line here. We had this long-term trend line here, and it kind of it became respected. This trend line was respected, was quite well respected, because we can see we had this first bounce, second bounce, third bounce, and the third bounce confirms the trend. We had this fourth bounce, although it missed it with a pip. Fifth bounce, we had this now, the last bounce here before kicking off. So that is your confirmation number 2. Number 1 was it rejected the cycle level 162.500. Number 2 is it has already respected the trend line, the long-term trend line. Now, what could have been the other conference before entering the market? The fourth could have been this candlestick that is forming here. You can see here, 4-hour time frame, we already have this bullish candlestick. Look at this. We have this bullish candlestick here that is well formed. If you can look at it, bullish candlestick here that's already forming. And if you can make use of it well, I believe you can see it. I want you to see, I want to zoom it for you. So we have this bullish candlestick that was formed here, and 4-hour time frame, this is the higher time frame. So it much makes sense to you having back at the back of your mind that we are at a key zone and we are already respecting the the trend line. Now we can draw a management trend line here, counter trend line here, just for management and all that. But waiting for this trend line to break would have been a lot of hassle waiting for it, because you'd have been already late. Now, the best I did was to set a sell limit here, of which I said you should do that. Have a stop loss at this previous high low. Now, and our target, you're targeting to 50 pips, so it's a good learn of 1:3. And now you should be learning at a profit. And I believe by this time you already have this rough idea of what to do or what to expect when it comes to conferences. You don't use one conference, and you need to utilize all the tools and navigate the market in according to how you understand, for you to make rational decisions. And I think that is all. Maybe to add a point, the only thing that you need to understand is you need to be more keen, and you need to understand your way of trading, because I am a swing trader. So for you being a day trader, you might not be trading like me, and it might differ. And with that, I believe you have gained something. You can rewind, you can download, and you can do anything you want with this video for you to run, and make sure you take notes and all that.